And welcome to our virtual seminar on water and water conservation. For those of you that don't know me, I'm Christina Morgan. I'm a partner here at VF Law. I'm with Rob Berry, the better looking person in our firm than everyone else. So I would say
I don't
that.
know about that, but
um, Rob is the nice guy, and I'm the mean one, and so we play good cop, bad cop. It's fantastic. Rob is very knowledgeable about insurance, and he's a heck of a negotiator. So I love him on my team. We work well together because I tend to bring things up here, and then Rob settles it and brings it back down after they're done dealing with me. So I have a somewhat of a diversified practice in the sense that I do a lot of general counsel, I do enforcement litigation, and I do some collections. That's a necessary evil. Having lawyers is necessary evil, like Rob likes to say. It's like going to the dentist. He has a cost of doing business, and hopefully you're here today to learn some things and not have to depend on lawyers and only come to us when you are really in need. And you can we won't sweat the small stuff, but of course there are a lot of different issues surrounding water. We certainly can't cover them all in an hour, but we want to get to your questions as much as possible. Terry, our director of client relations, is she's going to be monitoring the chat. If you see anything or think of anything that you want to ask, then please put it in the chat. If we can't get to it today, then hopefully we can get you an email, separate email. Just note that a lot of water issues, of course, are going to be very document driven and specific to your community. So we're 12:06. I guess we'll start. And here's our beautiful PowerPoint. So those of you who don't know too, that we're here on the Western Seaboard. We have I like to say that we will come and hunt any homeowner down on the Western Seaboard for collections because we have lawyers barred in all of these states. We actually are opening up an Idaho office here at the end of this month. And we will have boots on the ground in Idaho. We also do have boots on the ground in Flagstaff now, so in northern Arizona. And then if our traditional office, our corporate office is in Oregon, and we have Denver, which I will be in Denver next week with those folks, and we'll be running the Denver Colfax Marathon because we're all nuts and a little bit of sadists in our firm, and are committed to wellness. So let's see. Oh, these are all the different practices. Um, Rob's kind of done an about face from constructed defect and come into the world of general counsel and litigation with me, which I appreciate. A lot of you, I've done document amendment projects. We do a little bit of landlord tenant and eviction, and we have a very thriving and getting larger insurance defense, which is fantastic. Well, I don't know. I don't like insurance defense, but Quentin Cups in my office has been doing insurance defense, and we're on panel for a couple carriers, and it's been great. It's kept us busy and fed through the pandemic for sure. All right. I don't know how to get this off of the screen here. All right, water damage. And we've used some of these slides before. Obviously, there's the April 20th, 2022. We're going to go through the insurance stuff with Rob because I don't think he taught it. I don't think he's taught it before. And there's certainly some issues that have come up in the wake of the brand new Arizona Supreme Court case, Callaway versus Calabria Ranch. For those of you that haven't heard that case, please go look it up. It is we're very saddened by it in the sense of it was a very small HOA in Tucson, and the opinion's going to have probably large spread effects across. Well, it's going to affect HOAs across Arizona that are amending their documents, and that pertains to water issues in the context of many communities want to amend their documents to address cost sharing, also metering, that kind of deal. And I think that the Callaway decision is going to make it more challenging for associations to amend their CCNRs and address not just water issues, but short-term rentals and other things in the wake of the Callaway case. So I'm going to let Rob start out with the basics and nuts and bolts of water claims and the insurance issues, and then we're going to talk about, I don't know, I think the more fun stuff. You can do the dry insurance stuff, Rob.
Well, I find insurance coverage and claims exciting. I don't find them dry. And I've done I don't have a count or an estimate, but it has to be thousands and thousands of insurance claims. I've represented parties and HOAs on both sides, and I've recovered tens of millions of dollars from insurance carriers. So for HOAs, I don't think you can talk about insurance and insurance coverage without first talking about fiduciary duty, because obtaining insurance coverage, auditing the insurance, and having reasonable insurance coverage. I wouldn't say proper, because, proper, I don't know what, you can never anticipate every claim that can come, and it's possible you could have a claim beyond your limits, but if those limits are reasonable, then I think you've met your fiduciary duty. And we're not going to, we could do an entire hour on fiduciary duty and on insurance separately, but fiduciary duty is generally to act in the best interest of the members, what's in the best interest of the association. And we think that insurance and paying attention to your insurance coverage, and even reasonably addressing claims lies within your fiduciary duty. Now, we of course also mentioned the business judgment rule, that when an association or a board member relies on the advice of professionals, even if that advice is wrong or turns out in hindsight to be wrong or not the best road that should have been taken, the association and the board members are insulated from liability because they acted reasonably by consulting a professional. And basically that is an indemnification and protects them from liability for acting unreasonably. So that's the first thing, is maybe bound by fiduciary duty to have insurance. You may also be bound by the documents, but we talk about that a little bit in another slide. But the slide here, and I would just on this slide, the slide here, I don't know if I'd say this focuses on condominiums. I'd say insurance claims probably come up a lot more frequently in condominiums, and then when they do come up, they can be a lot more complicated. But I don't know if I'd say this focuses. This is it's certainly much more common in condominiums. So there are considerations for community managers and associations before the loss, and I've touched on that a little bit. We'll talk more about it. Immediately after the loss occurs, while the claim is being handled by insurance, and after the issue is resolved. And I'm going to go into that a little bit here now. Most important before the claim is lost is to audit your insurance. Figure out what kind of insurance coverage you have, whether it's adequate, whether it meets what's required by the documents, typically the CCNRs. And sometimes that actually is immensely complex, and you may need an attorney just to figure out whether you've met the documents. People often ask what kind of coverages there are, and I don't know if anybody remembers Bill Clinton. Bill Clinton had sexual harassment insurance, so you can basically insure just about anything. And there are ways to write policies. Now that doesn't mean that every insurance carrier will write the policies and writes every kind of policy. For example, some insurers only write auto, or some are home, life, and auto, and some are just about anything. And condominiums and HOAs are not the typical insurance. They're commercial policies. They're typically called commercial general liability policies. And there's various types of coverages an association would have. Those are, just to mention them, and we talk a little more about them, is liability, and that is for something the association does wrong. Casualty, and these are insurance terms, and generally brokers use them in their the types of policies that you have. Casualty for a loss to the normally it's the community, like physical damage. Fidelity, which involves like embezzlement or funds or accounts or theft or things like that. And then you also hear D&O coverage, which is directors and officer coverage. That's probably in your liability policy, but there could be separate parts for that. Sometimes associations have or are required to have workers' comp insurance, whether or not they have employees. And then there's other coverages that, like medical payments coverage. Most people don't even know, but a typical homeowner policy, I'd say more frequent than not, has a degree of medical payments, which is payment for loss, whether it's at fault or liability or not. It's an automatic coverage. So those are kind of the general types of coverage. A board and certainly a community manager should have some familiarity with what coverages the association has, what's required by the documents, what's in your CC&Rs. And I strongly recommend, particularly for community managers, boards, you can do this through your community manager, but asking questions of your broker. Particularly at the time that it comes to renew, that's a reasonable time to audit your insurance, and that happens once a year. So, understand your coverages, understand what you have. Community manager should have a relationship with an insurance broker, and you should do some vetting and asking questions about what kind of coverages you have. Immediately before and after a loss, if you have a loss, and the larger the loss and the more complex the loss is, and by complex, like as an example, if you have a damage to a condo and it's just a common area element and it's small, maybe it's less important. But if you have a leak that leaks into 10 different units, that's more complex. But the more complex and the more higher dollar amount, the more important this is. But immediately after a loss occurs, you should be considering two things. One is documenting the loss, pictures, saving emails, letters, anything like that, any kind of evidence. I mean, I've had cases where I've had a rusty broken pipe sitting in my office because that's evidence or something like that. So you want to consider these kinds of things, what evidence you can preserve and what you can do to document. Mostly it's taking pictures, saving bids also, and estimates and any emergency repairs. That's very important. But just as important, you want to consider whether getting an attorney involved at the time of loss. A lot of times I'm back a slide, one more. Getting an attorney involved at the time of the loss. A lot of times associations, without being sophisticated with insurance coverage, just kind of let the insurance carrier have at it and don't realize the carrier is gathering information to use against you. The way the claim is presented to the insurance carrier a lot of times makes the difference whether there's coverage or not. And we're going to get into that in a second, but we call it, it can be tendered if the association's a defendant, then you tender to the insurance carrier. You say, we'd like you to defend us. Or whether it's first party or third party, if you're asking the carrier to indemnify or pay a loss, that's called a demand. So those are some things to consider even before any claim. And now I'm on the next slide. we talk about maintenance versus some things are a claim, a loss, an event, and these are terms of art that insurance and policies use, or regular maintenance. And I can tell you generally that insurance policies have this broken down by words like continuous seepage or slow and regular or ongoing or unknown time period. Those are typically things that are not covered by insurance. Those are maintenance. Those are things that the association should have been doing. Events and losses and claims are, and you can obviously make a claim for anything. They can deny, but claims are a loss, a casualty, a storm, which are a storm, a wind gust, a ladder falling on a window, a car driving into the property, things like that. Those are typically things that are covered by insurance. So obviously, it's impossible to summarize every insurance policy, and they do differ, but those are general distinctions. And I have a whole other program on maintenance, and I would just briefly mention that you are as community managers and board members, you're the asset managers. You're the guardians of the assets of the association. And that's fiduciary duty again. You are required and bound by fiduciary duty to act in the best interest and consider these things. And one of those things that you have to do is properly maintaining. Additionally, things that aren't maintained generally cost more when they do fail or need repair or become disrepaired enough to be unusable or a problem, or someone sees it or complains about it. In construction, every component has a life expectancy, some longer than others. Some things are, some paint products and deck coatings and stuff and foam roofs should be every couple of years. Some things are a lot longer, like reinforced concrete should be 100 years. But everything has a life expectancy. Everything requires some amount of maintenance, and costs when you are not maintaining them will be greater than if you are maintaining them. It's kind of the expression penny wise and pound foolish. So you should be considering these things. Okay, so that's maintenance versus insurance. Another thing I would mention, and we're moving on to the second half of the slide, maintenance to prevent storm damage, is you may have maintenance requirements in your governing documents. They may require, and Christina and I have talked to communities that don't even know they're there and haven't done what they've required for years. So particularly high-rise condos have these maintenance requirements where you have to do an audit of the building, and sometimes they speak very specifically about what you have to do. They'll say you have to service your boiler chiller once a year, whether it needs it or not, examine your roof systems, elevators, other components once a year. Sometimes they'll be very specific. Sometimes they will absolutely not be specific. And then it's the acting reasonably and doing that. So the slide says, what areas are associations responsible for maintaining? A lot of times boards don't even know what is a owner or unit owner responsibility and what is the HOA. Probably in most planned communities, which means not condo, you have a pretty good idea of what those are, and just about everybody does. Not always. Sometimes they're complicated. Sometimes they're kind of blended type communities. But a lot of times it can be pretty complex in condominium associations. We've even been asked in the past to do a matrix of what's an owner responsibility, what's the association's responsibility. And then to further complicate things, there's what's called limited common elements, which is, well, it's what it says it is. It's typically they're components that are used by one unit. However, they are also common elements. Would you say that's a fair definition of that, Christina, or do you have something to add to that? And I was going to go into the statute.
A limited common element is still part of a common element. So we're talking about the condominium context, folks. But the limited common element is for the exclusive use, usually of one owner. So we talk about patios, balconies. Let me add on something that you said, Rob. Well, and a couple cautions here. Just because an association has a duty for maintenance on a component doesn't necessarily mean it's the same that the association insures that component. We see a lot of different back and forth, especially in which is not a legal term, townhomes. Townhomes sometimes are condominiums, sometimes they're planned communities, and you'll see where the association is responsible for insurance, even though the component is maintained by the homeowner or vice versa. I also note too, I think Rob alluded to maintenance schedules, maintenance matrices help, give some type of clarity, we hope, on who's responsible for what. We have seen a lot of uptick for regular inspections, and I think there's this conversation about regular inspections for maintenance, and especially reserve studies in the wake of the Surfside condo tragedy in Florida. um and I think if we don't touch on it, and maybe some of you might be interested, lenders are particularly asking for documentation on when components have been inspected. Have they been inspected by an engineer? What do your financials look like for budgeting for the regular maintenance? And lenders are asking for documentation that under the law we don't have to provide, but we want to, because we want people to be able to get loans, right, on federally backed loans. So these water issues they're complex, and I think it's not just Arizona, obviously, during monsoon that deals with water issues. It's everybody.
Yeah, and thank you for stating limited common elements better than I did. And also, yes, as to insurance, that's a great point, particularly for condos. If you're insuring components and we see this happen a lot, if you're insuring components that are not the association's common elements or common elements or limited common elements, then you're over insuring and paying for something that typically the homeowner's insurance covers. If you are not insuring all common elements and limited common elements, then your insurance may be cheap, but you're uninsured for some components. So great point. And that's why we recommend doing business for insurance with industry partners, with people that are familiar with your industry and support your industry. But it does fall on the association and community manager to make sure your insurance matches your components, and you're insuring the association's components, because there's also the homeowner's insurance at play, and you don't want to be insuring everything and paying for it when a lot of times you're double insuring. I wanted to bring up, there is a statute for limited common elements. It's ARS 33-1255C. It comes into play frequently, and it generally is that it is that the association can pass back the cost for limited common elements to the members. And a lot of times you say, well, why is it a limited common element? It's, if you leave it, like in a condo, and its balcony decks is a frequent example, they need maintenance, or they don't last forever. And it's every several years, at the longest, they should have some degree of maintenance. That's typically a coating, an inspection, making sure there's no water seepage or water intrusion, checking the flashings. And that is best done and most efficiently done all together, because of economies of scale, and you get more reasonable costs. And also, it generally wouldn't be done if it was left to the homeowner. So that's the end of this slide, unless Christina has anything to add. Uh,
Nothing fun.
okay. So before any claim or loss, we talked about this probably mostly audit your policies, meet with your insurance broker. The other thing that comes into play with um, components and acting reasonably is reserves. And if you're in it, frequently it is condos. If you're saying, well, God, we don't have the money for all this maintenance, then you haven't been properly reserved in the past. And reserves is also a fiduciary duty thing. And the logic behind it is you want to continuously be reserving for major components as they get to their end of their life expectancy. You want to be it's a fairness thing, because if you own the unit for 2 years and you don't replace the roof, then all of a sudden in year 3 there's a giant roof replacement. Well, that's not equally shared by everyone, and that's why the assessments should be put toward reserves, and also so the association is funded for that. So this is, as you maintain an audit and are aware of your components, you should be aware of your reserves. I recommend a reserve study. And there's a question that just popped up: is are reserve accounts required in Arizona? There's no statute on it, but I'd say your fiduciary duty does require you to not only reserve and continue or consider those reserves. And if your question is, do you have to have a separate account? I mean, it should be. That's good practice. So you really want to. I mean, I could see a real small community with 7 or 10 homes or something like that. But we would really strongly recommend it. There's no statute requiring but I think fiduciary duty does require it. You want to, like we talked about before, is promptly make necessary repairs. You want to consider the dollar amounts with your due diligence for how many bids you get. We use high rise, compare a high rise to a community with, let's say, 2 green belts, and the assets of that single family detached planned community, that may be a few $1,000s in sprinkler systems, where a high rise, your components or even a two-story, which is more common in Arizona, your components are millions of dollars that you are asset managers for. They're stucco, they're a lot of times stairways, they could be elevators, they could be a lot of glass, particularly high rises, very expensive roof systems. And the higher up you build, the more expensive things are to access. So consider the dollar value of your assets, and that's kind of how careful you have to be with bidding, or how thorough you have to be with how many bids you should get, and the amount of due diligence it's going to take for basically everything you do. I think this is the section where we already talked to, let's see, one more slide, I think is where we're at. So before any claim or loss, there it is. This is what we talked about, where with condominiums, where they call it bare walls coverage, full coverage, or it can really be things in between, where you want to make sure that your insurance coverage matches your maintenance responsibility. And I'm trying to go a little quicker here because I'm getting to the end of the half hour, and Christina's got a lot of water stuff to cover. And we also covered most of this slide. So the next slide, I think, if you, you're already on it.
If you're looking in the chat too, there were some questions about rules and policies. So there was a question about it, and I think it was about passing back costs for repairing damage pursuant to the Condo Act, ARS 1255 for repairs that benefit less than the owners. And so for those that you might missed it, we recommend policies to give notice to your owners that they could be on the hook for some of these for damage from water leaks. And because they get mad, obviously, because water leaks can be ridiculously expensive, especially in a high rise, that maybe they should carry a separate rider or separate policy for covering the association's deductible. So rules and policies are very important. So I just wanted to make sure that if you will look at the chat there and you could see my answer was kind of short in general, but that's what I'm talking about.
And I wanted to talk real quick about deductibles, and then that's about it. I realize there's a couple more slides and we can go through those, but I wanted to talk real quick about deductibles. In commercial liability policies, it's generally called an SIR, self-insured retention, which is like a deductible. And some policies require that actually be met and paid before you get any recovery. And you may say, well, that's, yeah, we get that. That's how a deductible works with a car. But like for larger claims, let's say you have a few $100,000 claim and you have a $10,000 deductible, they don't allow you to just collect the, let's say, what would I say, a $300,000 claim and a $10,000 deductible. They don't allow you to just get a bid and collect the $290,000. Sometimes they actually require that the association spend and fulfill its SIR, and that's something specifically stated in the policy. And like I said, I'm just going to go through the next slide is we already talked about document and gather your evidence and document your loss, keep photos, keep bids, what to do immediately after a loss. I just, one more time, I know I've said it, but I can't stress how important it is sometimes to have an attorney involved. And a lot of times, you know, an attorney can say, well, hey, your community managers they already have a bid. The carrier's accepted coverage, accepted liability. The adjuster's been out. It's been properly submitted. And you know, let us know when there's, you know, when you're paid, or if you're not paid, you know, it's more of a problem and we need to get involved. Sometimes it's as simple as that. However, sometimes it's extremely complex, where the way you present it to the insurance carrier could end up voiding your coverage because it wasn't properly, you know, it was presented more of as a slow seepage thing or something like that, rather than, well, the storm really did cause all of this. And then I recommend you use industry partners. This is I think we're one more slide, and then that's my last slide. Contract with licensed contractors. You know, check in on progress. I have a whole presentation on bids and contractors and progress payments. Make sure your progress payments are appropriate with the amount of work done, and that sort of stuff. And another thing at the end is you may have an obligation to disclose to your homeowners that it's been fixed. So consider that, and consider, you know, putting it in the meeting minutes when you do have a loss and it's repaired.
Where do you want me on slides, since I'm a terrible slide changer?
I completely loused that up for you. So
well, I don't think it was anything different than what you're saying, folks, where we're saying, you know, Rob is also, well, I don't think Rob touched on this about, you know, just be careful what you say to a homeowner. I know that we want to fix things and, you know, we want to get, but we don't know what coverage is going to be. We certainly have had clients that have promised, well, we're going to have paid out of the association's treasurer to put someone up, you know, for in a hotel, and they end up going down to the Biltmore, or instead of, you know, a Holiday Inn. You just have to be careful about what you promise.
And your policy may not cover it.
Correct. They might cover Motel 6, but they probably are not going to cover the Biltmore. Let's see. So we did talk about the licensed contracted bonding. We did talk about that. And then, you know, the redux on any type of loss here is, you know, do we have enough insurance? Does it make sense to have a higher or lower deductible? Sometimes associations are forced to have a higher deductible because they have such a bad history or a long history of claims. And sometimes it's worth having a conversation with an insurance broker and putting it out to bid and see if that there's another carrier. Um, and then of course, again, policies and practices and procedures, we like to have rules and give some clarity and be able predictability on handling these types of claims. Okay, so we talked about the deductible and I talked about that in the chat. For those of you wanting the code, spring flowers is the code for CAI, spring flowers. Okay. Um, Planned community townhouses. This is not exactly a term here. This is what I was talking about where a townhome might be a planned community. I have a planned community in here in Scottsdale that, for instance, the homeowners are responsible for the roofs, even though these units kind of are next to each other. And I'm saying units loosely because they really are individual lots, but are right up against each other. And again, understand there's a distinction between how much insurance you should carry and what's covered versus who has to maintain the component. Um, let's go back here. All right, let's talk about a couple of different things that have come up in the context of water. Um, those of you might know, and I know this has come up first in my office, but there was a recent law passed where if a homeowner requests to replace their, and I'm talking about, let's talk about water conservation. I'm changing tables here because I don't want to talk about insurance for the last 10 minutes or 15 minutes of that we're together. Let's talk about fun things. Water conservation. Everybody knows that water is an issue. It's a big issue here in Arizona as our lakes are extremely low. And there's a recent bill that was passed into law that prohibits associations cannot prohibit homeowners for installing artificial turf, although they can regulate its location, but they cannot completely prohibit a owner from installing turf. And I have a couple of homeowners and a couple of my clients who have already requested to install artificial turf, and there's no rules at all because it's such a new thing. Associations haven't adopted any policy dealing with how much turf it can be put in, where should it be located, what about the quality of the turf that they use. So those are some questions that you should be asking because the here and now is that turf is coming, turf is here, it's going to stay. So think about that. I also have had condominiums particularly approach me about sub metering and owners paying for the cost of their actual use of water versus a collective paying water by the association. Um, that is going to be highly dependent on your documents and whether or not the association has the right to meter and pass back the charges for utilities under your CCNRs. We've seen some documents where there's a gap. It says, well, the developer should have, but didn't. Then we've seen some that says the board can make the determination that we pass back utilities, including water. And so there's, I always when I was a younger lawyer and we had this metering question come up and Rob was with me litigating with me, we had a community where the board was just ready to meter. They, there's passing back the share of water to each individual homeowner in a condominium should help conserve water, right? If I don't care about how much water I use in my unit, I'm going to take baths, I'm going to run my laundry all the time. And so this board decided, well, let's encourage conservation, right, with water. So we're going to meter. Well, a bunch of owners said, well, that's not fair. I bought this condo on a budget knowing that the association was responsible for water and I don't agree with metering. And so it was a fight. It was a fuss. And it came down to the language in the CCNRs and whether or not the board had authority to put in meters. So I don't know. I guess you could say they kind of lost the war, but they gave up their seats as a board. They were thrown out as a board, but the meters are still there and people are paying their own share of water. So but there were a lot of lessons learned. I think if you're going to consider water metering in an association, you need to you need to talk to people, you need to garner support. You need to gauge everyone's support. And if you don't have language in your documents supporting water metering, the new Arizona case that I alluded to earlier, Callaway versus Calabria Ranch, might prevent you from amending your docs to allow metering, because what Callaway stands for is this idea that if a restriction is brand new and there's no notice that you might touch a certain subject in the CCNRs, then it's subject to unanimous consent, not the supermajority. So I think a callway is going to be a problem in the world of water metering for associations that don't have an authority in their documents. So, Rob, do you have
So,
anything to add about that case
yeah,
about
some
water?
people like it. There, sub-metering isn't only for condos. It occurs in planned communities, and some people it just drives them nuts to drive by and watch their neighbor overwatering their lawn and water running down the street and through the entire community, and they prefer it like that. So, and sometimes so different communities are different, and one that's an anecdotal story, and some communities it may be a better fit than others.
Yeah, there's one community that came to me and there was clearly authority to meter. And it actually said the board has the right to do this. And they went out and they got bids. They talked to their owners, and the owners are like, heck yeah, I'm not here for, most of the owners were snowboards and they didn't want to subsidize paying water for all of their neighbors. They don't use it for 4 or 5 months out of the year. So I really think it's a value system, right? Depending on the community. There is a question in the chat here. Um, I'm not sure I understand it here. What if we have a few washes that run through 500 plus home community mountain fires and then run off from a heavy monsoon season? That I would hope would be something, an event covered under insurance. Rob?
Yeah, well, yeah, there's a lot that I didn't realize. I think I don't know if I put that on the screen for everyone or if that's just on my screen or what. Sorry, I'm not the most technologically savvy person, but that's something that I wanted to address. That's absolutely something that the association needs to consider from several perspectives. One is maintaining the assets. Two is liability. And I'd have to know more about what exactly you have, and I don't know that it'll work for this typing on a chat, but you may have something where that was done by the developer 50 years ago, and that may not be sufficient with changing construction around the development or changing conditions. So you may need to make sure that that's sufficient. It may be the wash and the runoff may be causing damages, but if it's something where they have a thing called they call it 100-year flood or the 50-year flood, and
That's happened like
Arizona's
twice the last 10
yeah,
years.
Arizona's pretty dry, but until it's not, and you want to make sure you're planned for that. Whatever the way the property was developed may have changed. I don't know the vintage for that, but if it's contributing to fires, or if you're worried that the runoff is going to damage lots of homes or something like that, then that's something the association should do something about. And doing something may end at an engineer that says, well, this is reasonably, consulting with an engineer, or actually that's kind of substantial, but consulting with an engineer that says, well, this is reasonable for the conditions, or this is functioning as intended, and that's the end of it. Or, something with development around the community may have changed and it may not be enough. So it looks like there's a message. Natural washes, no development. But homes in some area have installed hardscape improvements that could really affect the run of water. Well, I mean, there's probably something in your documents that prohibits them from building in washes, and that's something to consider. So you may have an enforcement issue. And we can talk more about this. I'm just giving you general things to consider, but those, you've got some concerns.
Okay. So I was talking about metering as far as that's a hot topic right now. Obviously, fire-wise preventions have been a huge has been a huge issue. Has been a huge issue. Firewise program in northern Scottsdale and up north in our northern communities. Water wells has been an issue, or wells and sharing wells have been an issue. As far as water issues have been huge on my plate this last year for sure. The monsoon is coming. Obviously, we are into May. It will be here in a couple months. Um, water leaks and insurance issue. But is there any other questions that we have as far as I see more stuff in the chat. As far as claims and other things related. I'm trying to think if there's anything else on the radar. Again, let me put in the chat the case that you need to look at as far as CCNR amendments. It doesn't particularly talk about water, but it will affect every type of CCNR amendment from HOAs. Let me see. Callaway versus Calabria Ranch. It is. So for those of you for CI credit, the second special phrase for credit is Mother's Day. Happy early Mother's Day for all of you mothers on the call. And if you have any questions, please email Terry if anything comes up after this presentation, and she can get those to us. Is there anything else housekeeping that we need to do? I think we're good. Well, thanks for carrying the insurance part, Rob. And thank you all for attending, and we hope to see you again.
Thank you so much.
If people didn't notice in the email that we sent out, the reminder yesterday, tentatively, we do have our next course scheduled for May 24th. That I believe is a Tuesday. And that will be Quentin Cups doing the legislative update, for which there is some pretty significant changes this year. Yes?
What was the question? I'm sorry.
I was
cut
just
out
saying
for
that
me.
there's some pretty significant changes.
Oh, in the law? Yeah,
Yeah.
we expect there to be there has been some changes. In fact, we have delayed on printing our statute books, haven't we? I think Quentin
Yes.
Cups is going to be teaching that. For those of you who don't know, Quentin is on the Legislative Action Committee. And so he's kind of in the know with the law. And so we're waiting to hear from from him, really, particularly on the nitty gritty of all the different changes that have occurred. So I think that's it. Well, thanks for telling us that, Terry. And I look forward to listening to Quentin next.
Yeah.
Right.
So again, that's May 24th.
Great.
Hopefully we'll see you guys then.
All righty.
Thank you, guys. It's our
Thank you.
pleasure and honor to represent you and your communities. And thanks so much for joining.